It started, not with a bang, but with a whisper. Rajaratnam wasn't the kind of man you'd expect to see making Wall Street headlines. Born in Sri Lanka and educated in the US, Raj had the demeanor of a quiet professor. Thick glasses, soft-spoken voice, and a calm confidence that made others lean in when he spoke. But behind that mild exterior was a mind as sharp as a scalpel, and a hunger that made him one of the most dangerous men on the street. He founded the Galleon Group in 1997, a hedge fund that started modestly but quickly transformed into a financial titan. By the early 2000s, Galleon was managing over $7 billion in assets. Its returns? Staggering. Too staggering. While other funds were battered by market volatility, Galleon thrived, quarter after quarter. Analysts admired it. Competitors feared it. Regulators started asking questions. Galleon's offices weren't flashy. No gold-plated logos or marble lobbies, just rows of desks, a flurry of analysts, and dozens of phone lines ringing non-stop. But what mattered wasn't what you saw. It was what you didn't. In those calls, whispers flowed. Not rumors, not speculation, but hard, illegal, material, non-public information. Insider tips that turned Raj into a god of predictive trading. What Raj had built wasn't just a hedge fund. It was an empire powered by silence, secrecy, and a sprawling web of informants, some willing, some paid, all useful. Raj wasn't sloppy. No emails, no texts, just whispers, short calls, vague language, cryptic codes. They're going to miss. Pull the trigger. Check the numbers. Harmless words. To the untrained ear. But they moved hundreds of millions. One whisper came from a man deep inside Intel. Another, from a McKinsey consultant. One day, it was a board member at Goldman Sachs. The next, a tech executive leaking earnings. A full week early. Raj had ears everywhere, and he paid generously. Sometimes with money. Sometimes with access, prestige, or promises of future deals. It was organized, controlled, surgical. And for a while, it was untouchable. But Raj didn't know. One whisper had just landed in the ears of someone who would listen very, very carefully. And that whisper was about to bring the entire Galleon empire crashing down. The whisper that would change everything didn't come from a boardroom. It didn't come from Wall Street. It came from a man buried beneath it all, Rumi Khan. Rumi wasn't a nobody. Once a star analyst at Intel, then a trader with deep roots in Silicon Valley. She knew the game inside out. She had been one of Raj's many whisperers, feeding him valuable information in exchange for hefty profits. For years, they had danced this quiet, lucrative dance. But somewhere along the line, Rumi slipped. In 2007, during an unrelated investigation, the FBI stumbled upon a curious trade pattern involving Rumi's account. Profits that didn't add up. Timing that was too perfect. Names that rang too many bells. She was brought in quietly. No headlines. No handcuffs. Just a quiet conversation. And a choice. The agents didn't need to yell. They had something more powerful. Evidence. Calls. Timestamps. Financial records. All pointing to her connection with Raj. When they laid it out on the table, Rumi's usual confidence cracked. She didn't fold immediately, but she asked for coffee. And that's when they knew she was going to talk. Over weeks of carefully orchestrated meetings, Rumi began to reveal the skeleton of the Galleon machine. She spoke of code words, burner phones, and Friday evening calls timed precisely to avoid detection. She described Raj's discipline, how he would only take tips from a select few, how he cross-verified every piece of intel before trading on it. But the biggest bombshell came when she said this. You're not going to get him on the trades. You're going to get him on the calls. Raj had made thousands of them. Short bursts. Sometimes under 60 seconds. Never explicit. but they were constant. Dozens a day, hundreds a week. If those calls could be captured, if just one contained a whisper, a real whisper, it could be the start of a case. The FBI took the gamble. They wired Rumi. One cold morning, Rumi called Raj from a hotel in New Jersey. Her voice trembled slightly. She asked about a tip on a tech stock. Raj, calm as always, answered vaguely, but just enough. It was nothing that would get him convicted, but it was enough to open the door, enough to justify the next step. That step? Tapping his phones. All of them. Federal agents began a full-scale wiretap operation, something almost unheard of in white-collar finance. It was a move reserved for mafia bosses, not hedge fund managers. But Galleon wasn't just a fund anymore. It was a syndicate. And Raj? He was its kingpin. And now, every whisper he uttered was being recorded. By mid-2008, Rajaratnam was living his version of the American dream on steroids. $7 billion in assets under management, a penthouse office in Manhattan, private jets, and a list of investors that read like the who's who of global finance. Galleon was more than a hedge fund. It was a fortress, seemingly impenetrable, unquestionable. But inside that fortress, cracks had already begun to form. And the FBI? They were listening. Raj had no idea that nearly 18 months of his phone calls were being recorded. Legally, cleanly, and systematically. The surveillance was broad. Cell phones, office landlines, even his home number. The agents weren't just gathering random chatter. They were creating a timeline, a digital blueprint of a crime too complex to catch in any single transaction. The tapes began to speak. In one call, a former McKinsey executive whispered about upcoming earnings at a major tech firm. In another, a contact at Intel casually mentioned a CEO's upcoming resignation. In most cases, the information wasn't explosive on its own, but when combined with real-time trading logs, the pattern became undeniable. Raj was trading ahead of the market, over and over again. The FBI had what they needed, but they weren't done. They wanted more than Raj. They wanted the entire spiderweb. To do that, they needed to shake his network. One by one, Raj's inner circle was approached. Sometimes with subpoenas, sometimes with quiet knocks on doors before dawn. His closest allies, now targets, were given a stark choice: cooperate or burn. Among them was Anil Kumar, a former senior partner at McKinsey. For years, he had secretly provided Raj with sensitive, high-level strategic information, confidential corporate details that influenced billions in trades. When confronted with recorded conversations and email chains, Anil cracked. Another domino. Then came Danielle Chiesi, a glamorous and sharp-tongued analyst at Newcastle Funds, with deep ties to Raj and an even deeper Rolodex of contacts inside IBM and AMD. Her recorded conversations were damning. Laughing, bragging, detailing precise earnings before they went public. It was more than careless. It was surgical. She wasn't just a trader. She was a courier of secrets. Inside federal offices, a chart began to form. Faces, phones, trades, dates. It looked less like a hedge fund and more like an organized crime family. And Raj? He remained calm, dismissive. Even when rumors swirled, he told his staff it was nonsense. But the walls were closing in. And the whisper network he built? It was now shouting straight into the hands of the FBI. By the time Rajaratnam was arrested on October 16, 2009, Wall Street was already bracing for impact. He was taken from his Manhattan home in handcuffs. No warning, no press leaks, just a swift, coordinated raid led by FBI agents who had been building their case for nearly 2 years. The headlines hit like a shockwave. Hedge fund billionaire charged in massive insider trading case. But the arrest wasn't the climax. It was the beginning of the fallout. Raj wasn't the only one indicted. Alongside him were 5 other financial professionals, including Danielle Chiesi, who looked stunned and visibly shaken in court. The charges? Securities fraud, conspiracy, insider trading. The allegations stretched back years, over $60 million in illegal profits from non-public information. This wasn't just another white-collar crime story. This was the largest insider trading case in American history. And the prosecution had something Wall Street feared most. Tapes. Hundreds of hours of phone calls, precise timestamps, voice inflections, laughter, greed, recorded and replayed. When the trial began in March 2011, federal prosecutors treated it like a spectacle, and rightly so. The courtroom was packed with reporters, analysts, and curious hedge fund managers who wanted to know just how exposed they were. The evidence came in like waves: taped calls, bank statements, trading records, charts aligning whispered tips to massive trades down to the minute. One juror would later say, "It wasn't just about money. It was about arrogance. They thought no one was watching." Raj's defense? That he was simply a brilliant investor. That his trades were based on analysis, not leaks. That the government misunderstood how hedge funds worked. But the jury didn't buy it. Not with audio clips like, "The numbers are gonna miss. Dump it now." He just resigned. It'll go public next week. These weren't educated guesses. These were inside facts, trafficked like currency. The prosecution's case was airtight. By May 2011, the verdict was in. Guilty on 14 counts. 11 years in prison. Rajaratnam became the face of a new era of accountability in finance. Not because he was the only one guilty, but because he was the loudest whisper caught on tape. And Wall Street? It would never sound the same again. Rajaratnam's conviction didn't just close a chapter. It cracked open a vault. Wall Street had always operated in a delicate balance of brilliance and boundaries. But Raj's case made one thing brutally clear. Boundaries had been blurred, even erased at the highest levels. The era of everybody does it was over. Within days of the verdict, the ripple effects hit hard. Hedge funds began auditing themselves. Compliance departments ballooned overnight. CEOs called emergency meetings, asking a question many had ignored for years. Who else is on those tapes? But perhaps the most important question came from outside Wall Street. It came from Main Street. People who had lost jobs, homes, pensions during the financial crisis. People who had watched Wall Street get bailed out while they got buried were now asking, "Why wasn't this the first guy you arrested?" And they had a point. Raj didn't crash the global economy. He didn't create subprime mortgages or sell toxic assets, but he became the symbol of greed because his crime was undeniable, measurable, recorded. In the aftermath of the trial, more than 80 people were charged or investigated in related cases. Some flipped. Some ran. Others lawyered up. Names that once drew awe now drew subpoenas. Danielle Chiesi, once a rising star, glamorous and media savvy, took a plea deal. She admitted to passing insider information, much of it from unsuspecting executives who trusted her. Her sentence, 30 months in prison. She told the judge, "I lost everything, but I did it to myself." Others followed, executives from McKinsey, board members, tech insiders, analysts, whistleblowers came forward. The illusion of untouchability began to crumble. And then came Preet Bharara, the U.S. Attorney for the Southern District of New York, who made financial crime his personal crusade. In the wake of Raj's conviction, Bharara's team unleashed a string of high-profile arrests. They called it the Galleon Blueprint, a method for flipping informants, tracing phone calls, matching trades with tips, and forcing the industry to face a truth it had long buried. Information is power, but stolen information is a crime. But even as the government celebrated its wins, not everyone was convinced. Some critics argued the focus on insider trading missed the bigger picture, that the real problem, the system that rewarded recklessness, short-term profit, and opaque power structures, remained untouched. Still, one thing was undeniable. Rajaratnam's downfall had changed the rules. Fund managers whispered less. Phones were used more carefully. Meetings moved off-grid. The fear was real. And for once, fear wasn't just on the side of the small investor. It had reached the penthouses. In 2022, over a decade after his conviction, Raj was released from prison. A free man, but far from redeemed. His name was stripped from awards, removed from charities, wiped off boardrooms. The billions he once commanded were scattered. His Galleon group? Gone. Dissolved. A ghost of an empire built on whispers. But the story isn't really about Raj. It's about a system, a culture, a truth that was always there, waiting to be heard. Because in the end, it wasn't a brave whistleblower or an angry regulator who brought him down. It was a microphone, quietly recording the sounds behind the suits, behind the trades, behind the money. A whisper that became a sentence, and a sentence that became a warning. This was the story of Galleon, of power bought, secrets sold, and the billion-dollar whisper that brought it all down. For more true stories hidden behind the headlines, subscribe now, because this is just the beginning.